Good evening, everybody. It is currently September 30th, 2019, and I'm getting ready to go through the dividend alerts for tomorrow, which will be October 1st, 2019, with the ex-dividend dates of Wednesday, October 2nd, 2019. And I want to clear up some confusion. This isn't a long-term investment on the dividend stocks. This is a long-term passive investment into your account itself. The dividend capture strategy is exactly how it sounds. We're capturing only the dividend. I'm getting questions about, well, how does this dividend look, way down the line? It's got this 6% growth, 10% growth, whatever. That's not what we're doing. Long-term dividend investment is great. Later down the road, we will get into that. But right now, specifically to this strategy, the dividend capture strategy is literally just to capture the dividend. It is not a long-term hold. We are in today and we are out tomorrow. It's just an overnight hold. Majority of these plays we're buying like we're doing EOD alerts, end of day alerts. Within the last hour, half hour, because we're only trying to capture this here, just the dividend, all right? And when we get into these dividends, so I'm going to walk you through right now. So we're going to treat today like it's October 1st already, because we're looking for the ex-dividend dates for the 2nd. I'm at NASDAQ.com, and I'm under the dividend section up here. Just go to the dividends, select the ex-dividend date, which you want it for tomorrow. Okay, so like I said, today's alerts are going to be for October 1st with the ex-dividend date of October 2nd. You must be in the trade at least one trading day before the ex-dividend date. You can sell on or after the X date. We're selling on the X date. Okay, so we're going to go here to NASDAQ.com and go to the dividends. We're going to arrange this by the dividend price from highest to lowest. Okay, because what I do is I keep the dividend price 10 cents and above. Reason is not that a sub-zero penny stock that's paying a 5-cent dividend can't be a good investment. It's just I found this strategy to work the best when you stay 10 cents and up and the price of the stock $40 or less. And you want to keep the dividend amount in correlation with the price of the dividend. So if this, you see here for NRZ, if this was a 50-cent dividend payout, you want the price of the stock to be in the $50 range or less. So GPMT right here is a 42-cent dividend price. You want the price of the stock to be in the $40 range or less. Okay. So on and so forth, 20 cents for a $20 stock, 10 cents for a $10 stock. So let's go through this. I'm going to walk you through live. You're getting an over-shoulder view of exactly what I'm doing. These are going to be the alerts for October 1st, 2019. So let's go through. All I do is I start from the top, NRZ. I come in here into Trading View, NRZ, and look for the price. Oh, look at that. NRZ, 50 cents. It meets our criteria. It's a $15 stock. So what I do, I go to my snipping tool for you guys, hit new, and I copy and paste this right into the alerts. So here, you're seeing exactly what I do, how you guys get your alerts every day. So in the dividend alert section of the Discord server, I have it labeled. When you see this is just me breaking up the dates. I try to, sometimes I forget, but I try to separate my days with this little bar here. So the dividend list for October 1st, 2019, the ex-dividend dates are going to be October 2nd, 2019. This is the day we buy, this is the day that we sell. For the strategy to work, buy today, sell tomorrow. There's no holding past the ex-dividend date. We're in today, out tomorrow. So I have it labeled here exactly how you're going to see it in order. So all I do is copy paste and look. Company, symbol, the expected date, X date, boom, boom, boom. Okay, let's go through the next. GPMT. All I do, GPMT. Now I'm not worried about the price action yet. We'll filter through that later. You guys are going to see that this is falling, but I'm not concerned about that right now. All I'm trying to do is get the stocks out there, and then we'll filter through those. It meets the initial criteria. It's a 42 cent per share, and it's an $18 stock right now. It meets the criteria. So what we're going to do, all I do, copy. Then I'm going to paste it into the alerts. I just keep doing that over and over until I get all the way down to the 10 cents. Once I get below 10 cents, it's done. AXS, let's go through it. AXS right here, 40-cent stock. Let's see what it is. AXS, $66. On to the next. We're looking for stocks that are $40 or less. HASI, $29 stock, and it is all you do is you round this up, so it'll be 34 cents. When you guys see this, you just round it up. HASI is at 34 cent because we're rounding up of that extra 5. Copy. Let's double check. Okay, yep, we're in the criteria. Paste it to the alert. I'm going to walk you all the way down to the 10 cent. We're going through this entire thing together tonight. You're going to see the exact process of what I do. Now, luckily, I can already tell we don't have much on the list for tomorrow. But sometimes this takes quite a while to go through. Sometimes there's stocks where eventually once I get to the 30 cent mark, I just stop because we already have 20 stocks on the list already. And it's just pointless to keep going all the way down to 10 cents. You guys are going to get too overwhelmed trying to figure out and filter through exactly what it is that you want to get into. Okay, so I think the next one was HTA. Yeah, HTA. All I do, look through. HTA. $29 stock. HTA. It's in the criteria. 32 cent per share. And into the alert it goes. Oop. Once we get through the last dividend, I'm going to show you how we filter through these and what you look for as far as getting into the stocks. Alright, so CUZ, we'll look at CUZ. It's a $37. It doesn't match, so I move on to the next. $37 stock, 29 cent per share. It doesn't fit my criteria. I move on to the next one. BLGA. Cryptocurrency, why do you do that? Alright. On to the next. Hi, Doc. You are one of our dividends today. Let's see how much Doc is worth today. Doc, you are worth $17.75 a share right now, and looks like you are bearish reversing on us. Come on, Doc. Doc is worth 23 cents per share on the dividend. $17 stock. Doc, you fit our criteria today. We are putting you on our alert list. And for those of you that don't understand what I'm talking about right now, Doc is our CEO. You all should know Doc. SSD. Let's see. SSD. On to the next. INSI. INSI. $20. INSI is 20 cents. It fits our criteria. Going to copy paste. And then, like I said, we'll filter through all the junk later. But it really, even when you guys make your purchases into these stocks for the dividends, it's all comes down to comfort. What do you feel comfortable with? Do you feel like the stock is going to continue moving forward? Do you think it's going to drop significantly? You know, is there earnings tomorrow? You do have to check. You know, sometimes earnings and dividends will run together. You got to check that. Make sure you're not going to run into something that's going to gap significantly down. ABM. I'm trying to do this and talk at the same time. I have bad ADD, so bear with me. $36 for an 18-cent share. On to the next. CW. Starting to get to the end, guys. On to the next. $129 stock. We are not getting that. Safe. Really a 16 cent. Remember, round up if you see that. Safe. 30. We already know that it's not a 30. GLT. Let's check out GLT. 15. And we are at 13. It's fine. Okay, because we're in the 1-0 range. This is within the 1-0 range, okay? So GLT works. It fits our criteria. We're almost done. Almost out of this. One more to look at. VAM. VAM. And it fits our criteria, so we're going to put VAM on the list. And that is going to be the last one. Now, if you guys want to continue searching through these and seeing if any of these are sub-zero stocks that are going to pay, 8 cents or whatnot, go for it. That's totally fine. Just stick to the strategy. Stick to the same concept, okay? You don't want to get a $40 stock that's a 10-cent per share dividend. That price gap doesn't make sense. That's why for the strategy, I like to stick with 40 cents for $40, 30 cents for $30, 20 cents for $20, so on and so on. So if you do decide to go below the 10 cents, just make sure you stick to that same formula all the way down into the sub-zeros, okay? Now, what I do to filter through the stocks is all I do is I go one at a time. Well, also you're trying to do is look for forward momentum. Enough momentum to where the risk of it dropping significantly below the dividend price is a low risk. So let's look at NRZ first. NRZ. Now, I don't use TradingView during my trading days. I use TD Ameritrade. I just didn't load it up. So as this is moving throughout the day, we can see a good trend line support, and we'll get into that in another video. Support and resistance video is going to be coming out soon. But you can see that this is following a good trend line support right now. So if it were to hit this green line here, I'll explain all that in a later video, and start to rally up. Like I said, these are typically EOD plays, but if it's going to continue on this trend, I'm going to grab it here. Let's see if I can zoom in a little bit. How do I do this? All right, I'll try to zoom in. Because look at the absolute bottom. The low of the day was 1557, and the high was, looks like 1573. Kind of covered up there. So the price gaps are not very large. A very low price gap from the top to the bottom, and that's what I look at. This tells me that when it does gap down, because we know it's going to drop on the X date, that the price gap shouldn't be too significant. So I don't want something where this little candle is going to be a $2 difference. I want this little candle to try to be around that 40-cent price difference. So NRZ, okay, is the 50-cent dividend, and from the, looking at these candles, this low 1498, the high is 1507, the low 1501 to looks like 1522, low 1512, 1527. So it's staying, these big candles, even this large gap right here, the low 1531 up to 1560, it's staying within or close to that 50-cent price drop. So these are the stocks I'm looking for. This has good forward momentum coming up. The 50-cent, the price action is within or at least close to the dividend price. So this would be one that I would have a good chance of purchasing early tomorrow. So if it hits this trend line and starts to rally up a little bit, I'll probably just go ahead and jump in, because even if it comes up and then it, on the X date it gaps down, it's not going to be a significant price drop just based off the averages. I mean, even look at this, the dividend gap from here. So we have it closed out on this last dividend at 1584. It opened at 1543. So I mean, even the gap is not a large gap. That is a very easy gap to recover with your other trades while still capturing that 50-cent per share dividend. So you're going to be in profit. And this is what we're trying to do. So we're only going to buy one or two shares of this. With it being a $15 stock and a 50-cent dividend tomorrow, I'll probably buy 2 or 3 shares of this. So that'll put me at $1.50. Excuse me. And then all I need to do is grab a few more of the other dividends to total out my $2 to $5 price range per day, and then just rinse and repeat tomorrow. Don't overthink this, guys. This is very, very simple, a very passive way of trading and building up your portfolio. You're investing into your overall balance. You're not investing into the stock. You're literally just trying to capture the dividend. We know, again, it goes back to the very first video. Stick to your know why. Know why you're getting into the trade. I know why tomorrow I'll be getting into NRZ. Because tomorrow is the last day that I can get in to capture a 50-cent per share dividend. And it's a $15 stock on a 50-cent per share dividend. That's a great price ratio. These candles, even these larger ones, are small enough to where it's staying within my that 50 cent, or at least close to the 50 cent range. The previous dividend, the gap, the price range is not that bad. Even the high of day, even if you were able to ride it up to the high of the day, at 1554 with the close prior 1589, you're definitely within that 50 cent. So tomorrow we'll grab it off the trend line and let it ride out on the X date, which will be October 2nd. We sell it, we rinse and repeat. That's all you do with these dividends. Look for that forward momentum. Make sure the stock isn't going to significantly dip on you. Well, let's take a look at a couple more. So what were we at? We were at GPMT. Let's look at GPMT. Keep this very simple. Stick to your know why. Know why you're getting in. Don't change your strategy midway through. Stick to your know why. Okay? So here. Tomorrow, GPMT, if we were to get in, we're looking at a 42 cent per share dividend. And here, we got the reversal. I'm not going to tell you what it is. You guys should know this. What chart this is right here. This is an indicator. Go back to the beginner's guide and cheat sheet to look at all those candlestick patterns. Okay, I put it all in there for you guys. So let's take a look at these candles. Even though it's on a reversal, let's see what's happening. So we got a 42 cent per share dividend. The low looks like 1858 is what it looks like. The high is 1878. Let's take a look at some of these really long candles. Let's take a look at our price range. Let's move this out a little bit so we can see. Okay. The absolute low, 1822, 1875. So even with these long, significant candles, it's still pretty close to the 42 cents per share. Let's look at the last dividend. The gap here. Okay, so it closed out. Gotta move that out of the way. Hold on. So close out on the last one at 1924. We opened. We gapped pretty good. Opened at $18.83, but we caught a high of $19 that day too, and it closed out at $18.97. Okay, so the close here, $19.24, with a high of 19 and a close of $18.97. That's pretty close to our dividend price. Even though this may trend down, this would probably be more of an EOD play. I don't want to capture it early tomorrow if this is reversing and it drops significantly on me. I'll let this trend down a little bit. If it doesn't look like it's going to drop too much, I mean, these indicators are starting to get overextended, so I may or may not get into tomorrow. But this would be more of a EOD type play. Okay. Make sure, please, that you do not short sell these stocks. Okay. If you short sell, you will owe the dividend. It is not a good strategy. I've had people ask me that all the time. Well, if we know that the price is going to drop, why wouldn't we short sell? Trust me, I thought of that too. I am a master of loopholes. I love finding loopholes in the stock. Well, the stocks beat me in that loophole because when I tried it, I found out the hard way when I first got into this. Is once I shorted the stock, I ended up owing that dividend. You might be able to get away with it with options, because with options, you don't owe the dividend. So if you do a put, you may be able to get away with it. Again, stick to your know why of when you trade. Let's take a look at one more and we will wrap this up. I know this is turning into kind of a long video and it's late. The last one here, HASI 34. Remember, when you see that 335, you just round that up. 34. Okay. What did I say it was? HASI. HASI. Alright. So this one, it's got decent momentum. It reversed. Nice little small candlestick here, a little short-bodied candle. So tomorrow we're going to watch it. This again will most likely be an EOD play, but look at the support line. It's trading right off the EMA here. And just so you guys can see what it is, I got my green candle here set as the 3 EMA, and the red candle, the green line is the 3 EMA, and the red line is the 8 EMA. Okay, these are very significant price points, moving averages that a lot of traders use to determine different support. In a way, it almost kind of acts like a squiggly Fibonacci retracement tool in a way. You can find easy support and resistance just based off these moving averages. A lot of the common ones, 3, 8, 20, 100, 50, 200. So just play with them. But anyways, so we got decent forward momentum. I see that the 8 EMA is acting as pretty solid support right now. So what I'll be doing tomorrow is watching the price action as it comes off the 3 EMA. If it hits or goes below and begins to rally up, I may jump into this one early, but from what I'm seeing right now, this one again will probably be more of a EOD play. 90% of these are going to be EOD plays where you're going to buy in within the last hour or 30 minutes of the market. You're not totally worried about the price action of the stock. I mean, it matters to the point of I don't want my price to drop more than or too much more than the dividend. If it goes a little bit past, it's no big deal because we're recovering that gap with our other trades. But if we're going to, buy something at $30 and it's going to dip all the way down to 27, well, that kind of defeats the purpose of a 34-cent per share dividend. So the price action isn't too much of a priority as far as when we get into the trade, because that's not what we're going for. We're not going for the capture of the stock. We're going for the capture of the dividend, but we just want enough of a price movement to where it's not going to affect the dividend too much. All right, guys, I'm going to wrap this up. I just wanted to give you a quick over-the-shoulder live view of exactly what it is that I do every night, every morning to go through these dividend trades with you. Keep it simple. This is not the long-term investing into the dividends. We'll do that. We'll introduce swing dividends and long-term dividends later down the road. But right now, I want you guys to just focus on this aspect of it, capturing this passive income, because that's all this is doing. This is literally just giving you a passive income. Stick to 1 or 2 shares. You want to, depending on what your balance is right now, you might even just be able to get a total of 2 stocks, 1 share of each. That's okay. It's going to add up over time. Eventually, all that money is just going to be flowing into your account daily while you're recovering that gap of the other trades. And before you know it, even if you save up, take $50 a paycheck and just keep saving it, put it away, use that for strictly dividends. Whatever you got to do, scale up. Eventually you'll be at $5 a day, $20 a day. Before you know it, you're at $100 a day. And that's what this is meant to do. Over time, it is a passive income investment strategy into your balance, not the dividend, not the stock. This is literally just to build a passive income for you. Okay. All right. We're going to wrap this up, and I will see you guys in the morning with these dividends. Ciao.